Gold and silver and platinum are the favorite assets to hold in the current inflationary environment. The dollar will not vanish and just disappear, but more and more trade and more transactions will occur outside the US dollar. And this is one reason I recommend investors to have money outside the dollar region. And the dollar region includes, of course, the US, the UK, then the VOC members, Canada, Australia, New Zealand, and so forth. So I would have money outside these jurisdictions.
During high inflation, investors may revert to buying gold as an actual physical asset that holds its value. Periods of high inflation often correspond with a rise in interest rates and general economic uncertainty. As a result, gold is seen as a haven, and increased demand results in a surge in price. Marc Faber, author of the Gloom, Boom, and Doom report, firmly believes that precious metals like gold, silver, and platinum are excellent assets to hold during inflation. These metals safeguard against the declining value of money when prices rise. While Faber doesn't think the US dollar will completely disappear, he predicts that more trade and transactions will happen using currencies other than the US dollar. As a result, he advises investors to diversify their investments and not solely rely on the US dollar region, which includes countries like the United States, the United Kingdom, Canada, Australia, New Zealand, and others. Since 1933, the US dollar has lost 92% of its domestic purchasing power. Even at its moderate 1994 inflation rate of 2.7%, the dollar will lose another half of its purchasing power by 2022. In international markets, the dollar has, since 1969, depreciated 65% against the Deutsche Mark, 74% against the Swiss franc, and 76% against the yen. Gold has historically been a good investment option when the prices of goods and services are rising. Investors tend to turn to gold as the US dollar loses value, increasing its demand and value. Investors may also view gold as an excellent way to store funds for the future when they need extra money and the cost of living has increased. Faber highlights the historical resilience of gold as a store of value against inflation. For instance, the price of an ounce of gold has risen from $35 in 1970 to over $1,900, which he believes is a reasonable hedge against inflation. Regarding the potential trend of increased trade in currencies other than the US dollar, Marc Faber still needs to be more concerned about the possibility of the BRICS countries, Brazil, Russia, India, China, and South Africa, introducing their collective currency. Faber believes that unified money for the BRICS nations might be an interesting idea, but its realization is still being determined and not an immediate concern for investors. Now, watch excerpts from Marc Faber's interview with Silver Bullion TV. Before we start, smash that subscribe button and remember to enable post notifications to stay updated on our latest uploads. Thank you, and enjoy the video.
Gold and silver and platinum are the favorite assets to hold in the current inflationary environment. But I have to say that the investment community, they find these precious metals to be not sexy enough. They prefer to have something that moves in a day by 20%, like stocks, like the unicorns or the SPACs and so forth, meme stocks, and stocks with the large short positions and cryptos and so forth. They love things that have a potential to go up 20% in one day. And gold and silver and platinum don't share that kind of quality. But if you want to look realistically, in 1970, you could buy an ounce of gold for $35. It's now over 1900. Well, in my opinion, it's kept up with inflation reasonably well. So I hold gold, of course. Now, someone else may say, I prefer real estate. Well, in inflationary times, it also performs well until the dumb government officials that we have today will decide to introduce rent control. And about the BRICS currencies, I suppose more and more trade will occur between countries and countries, and they will settle the trade in non-US dollar currencies. But since you asked, I see a big opportunity in the stocks of some emerging markets. First of all, the Latin American markets, Brazil, Colombia, Argentina, Peru, Chile, and so forth. Because in World War III, and that is not my view, but some of my educated friends, they think that World War III has begun. Latin America would be a little bit aside. The war would be fought between Russia, China, and the US and Europe, and so on. So in that scenario, you want to have some money in Latin America. I also like to point out that in Asia, we have some very depressed markets, including Pakistan. And there are some stocks in Indonesia that are cheap, in Malaysia, in Thailand, and Vietnam. And at the recent Barron's Roundtable, not one of the 10 panelists mentioned Chinese stocks, not one, or a name in Hong Kong. Some of these stocks are very inexpensive. That's where I would look at, and not worry too much about whether the BRICS will have their own currency or not. I would just invest some money outside of the US dollar.
According to Marc Faber, high inflation can lead to a decrease in the value of the US dollar, which might worry some people. However, he points out that the stock market often performs well during inflationary periods, benefiting wealthy individuals with significant stock investments. Despite this, Faber highlights the challenges of investing during inflation, as not all assets respond equally to rising prices. Some prices may increase more rapidly than others, making it difficult for investors to predict which investments will thrive. In such an uncertain environment, managing investments becomes easier for most people. Faber believes that diversification is the key to mitigating risks and achieving better financial stability. This strategy helps safeguard against potential losses from specific assets and provides a more balanced and secure portfolio. Faber advises that along with holding some US dollars and investing in other currencies and assets from different countries, he believes having a mix of investments outside the United States can help balance the risks and provide better protection during uncertain economic times.
Well, in the US, someone could argue, okay, the Fed prints money, the dollar goes down, but the stock market goes up. So the rich people don't care. The stock market, say the AI-related stocks have gone up much more than the dollar depreciation. Other stocks didn't go up this much. This is the difficulty with participating in an inflationary environment. The inflation doesn't touch the entire price level equally and everything goes up equally. No. Some things go up here and then they go up there and so forth. So you have to kind of trade this inflation accordingly. I think it's quite difficult to do it for most people. That's why I'm diversified. Yeah. And at all times diversified. I have some dollars, but also non-dollar currencies. I have investments mostly outside the US. We've seen it many times. I mean, the Romans had a global currency during the empire, and then it vanished. But there's still the Italian lira. And the Spanish had a global currency, a reserve currency. And the British, until after the First World War, the British pound was really the global currency. And then the dollar came up, especially after the Second World War.
In a period of high inflation and economic uncertainty, investors may increasingly turn to gold as a valuable physical asset that holds its value. The demand for gold rises during high inflation, accompanied by increased interest rates and economic instability. As a result, gold is considered a haven, and its price is likely to experience an upswing due to high demand. Will you consider investing in gold to safeguard your wealth during inflation? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.